Good evening, everyone. Welcome to another class for corporate and economic laws, where today and day after we'll be discussing a topic on corporate laws, that is appointment of managerial person and remuneration. So friends, I am C. Naveen Khandelwal, who will be taking and guiding you for the next two sessions. Hopefully by now you must have got the knowledge about appointment of directors and the qualification of directors. And now we are going to be very specific, and we will talk about appointment of managerial person. So that means we need to understand who are these people, how the appointment will be done, and more important, the calculation of the remuneration part. As each chapter is important from exam perspective, so will be this chapter. And if you review the old papers, you'll find that at least one question will be coming from this particular topic. And from the toughness level, I would say that it is a relatively simple chapter. That is chapter number 2 of your course material. So therefore, I would suggest it is a scoring topic with not much of complication involved and a bit of calculation involved. And I think as a CA student, we are good at calculation part. So let's start, friends. And the coverage would be multiple things. Apart from understanding the definition part and the process part, as I said, there'll be a lot of questions on the calculation part and linking the calculation with some other concepts also. So these are the broad coverage of the whole chapter, covering from section 196 to 205. Relatively around 10 sections to be covered in next two sessions, which gives us ample time to understand, in depth, solve a lot of questions and also revise. So we'll be doing all these three things in due course of time. So let's start with the first part. We'll divide this whole lecture into two parts, friends. The first part will be covering about the appointment of the managerial person. So that is more or less covering the sections of 196, 201, 203. And then I'll cover one basic concept of 205 also, covering the secretarial audit report. So these are 196 is a major one, then 201, 203, and 205 are more of administrative section, except 203. And then the next session would be on the remuneration part, which will be covering 197, 198, along with that schedule 5, and 199, 200, 202 also. So these will be the major sections in the second part. So friends, you must be hearing this word quite often at various level in newspapers, in annual reports, and during the course of discussion also, that there is a word known as KMP, Key Managerial Person. So if you go by definition, the Key Managerial Person includes whom? So they will be including the CEO, the Managing Director, the Manager, the Whole-Time Director, WTD, so, and the CFO and the CS, the Company Secretary of the company, that is the Compliance Officer, and then any such other officer working below the Board of Directors under whole-time employment and designated as KMP. So that means there has to be certain resolution where you appoint a person and you designate that person as KMP. So if you go by this particular concept, that means more or less in any company, if you go through any company's report or studies the balance sheet of the company, you'll find that the broader terms which are used for KMP are either these 5 terms. But if there is a new term which has been coined by any of the company, then it has to be mentioned in the board resolution where they term that person as the KMP. So we'll be discussing the definition of these words, majorly the word of MD, manager, and WTD. And obviously CFO, CS, we all know, though these are terms which are defined in the Act also, but they do not involve any technical understanding of the definition. That is this part. and this part, but we'll understand this, and this. The MD, the manager, and the WTD. So, who are these people? That's more important. So, KMP explained so 3 words which I mentioned. The first word which comes is the manager, the WTD, and the MD part. Manager, by definition, a person who has got a substantial control over the affairs of the business. Very important, friends. Controlling does not mean in terms of shareholding, but who manages the affairs of the business. So that can be termed as that person can be termed as a manager. And obviously, he will be under the control and superintendence of the board of directors. That is very important. And, he will include a director also, or any other person occupying the position of a manager by whatever name called. So friends, very important here, name is not that much important. The more important aspect which we have to consider is this part. Who has got a substantial control over the affairs of the business. He may be termed as a manager or any other name. And whether he is under employment or not, that is also not material. So not necessary that he has to be under employment, and not necessary that he has to be a director, because here the word means includes a director. That means it is not necessary for a manager to be a director. But if he is a director, not a problem. So that is the first thing which you have to consider for the definition of manager part. So this part and this part. The second definition is of the whole-time director, which means includes a director in the whole-time employment of the company. So that means he's a person who is working exclusively for the company, where the manager is not necessarily in service. That may be a possibility. Now, when you question about the director part, no, he can be an additional director, any director. So that's not a question. There is no such specific classification out there about the what type of director is to be termed as a whole-time director. So you can be any director. So very simple definition, no complication involved. The third person, who is explained as a KMP, is the managing director. And normally you will find in a lot of companies, the person who manages the affairs of the company is termed as a managing director. So a managing director, a person who is a director, very important. So by definition, managing director has to be a director. So a director who, by virtue of the articles of a company or an agreement with the company, so let us break that, or a resolution has been passed in its general meeting, or by its board of directors. So we can break it into 4 parts. Either the AOA authorizes the MD, or you enter into an agreement, or in a general meeting a resolution is passed, that is the managing director, or the resolution passed by the board of directors. But then again, you need to understand the role of the managing director. So the role remains same, the management of the affairs of the company. So if you see, the manager and the MD both have got the same role. That means managing the affairs of the company. And they will function as per the board of directors. Same concept to be applied in manager and managing director. So therefore, when you see that the responsibility of both the person are same, you can very well understand that a company may not like to appoint 2 persons, one a manager and one a MD. Obviously, because the responsibility is same. Going ahead, after understanding the definition of these three words, that is manager, WTD and MD, let us understand more complications. So under section 254, the explanation to 254 is nothing but the definition of MD. It gives you further explanation that what is the role of MD and what type of actions cannot be termed as having substantial powers of the management. Therefore, if that person is doing these kind of jobs, probably you cannot term that person as the MD of the company. So this is a very important aspect because this can create a case-based situation where a question can come in a descriptive format where they will mention the person is doing this kind of job and is the appointed as MD because of such duties performed by him, whether it is valid or not. So that means here it is explained that substantial powers of the management shall not be deemed to include to do such administrative acts. Now, what are those administrative acts? Such as the power to affix the common seal of the company to any document, very simple, to draw and endorse any check on the account of the company in any bank. That means he's signing a check, he's affixing the common seal when the documents are executed, or is drawing and endorsing any negotiable instrument as defined under the Negotiable Instruments Act. You're signing the share certificate if the share certificate are issued in physical format, so you can sign the certificate, or you are allowing the registration or transfer of any share. If the shares are transferred in a physical format, then you are permitting that transfer of share. So these people, these actions will not make you qualify as the MD of the company. So very important, remember these 5 points. Remember these 5 points. Now, how do you remember? I think 2 are related to the certificate part, 2 are related to the word draw, and 1 is related to the common seal. So draw, share, and common seal. You can highlight these important words through which you will be able to recall these 5 points. Now again, one important thing, friends, the same concept that a director who occupies the position of a managing director not necessarily may be termed as a managing director. Not necessarily, he can be called as a managing director. He may be called by whatever name. So again, manager or MD or what's in the name, that means any other person, but they should be designated as KMP. That's more important, friends. So I hope now the definition of MD is clear, definition of manager is clear. Now let us draw some interpretation, inferences from whatever we have studied and understood. So what could be the inferences which can draw? The first inference, manager has to be a director. Not necessary, we have understood by the definition. So we have understood that the KMP, the role of KMP as a director. So here is one example, and let us try to answer this question. So Kangana is a manager of finance department. Can she be termed as manager for the purpose of Companies Act? So what could be your answer, friends? Now remember, here the person is manager of the finance department. While the definition of manager means a person who is interested with the affairs of the company. So here she is looking after one particular department. Therefore, she cannot be termed as a manager under the Companies Act. Very important, friends. So if you find a question where a person has been designated a manager of a particular area, you cannot generalize and take as the person as a KMP. Next is, the Kangana manages the whole company, but she is not the director. Can she be termed as manager as per the Companies Act? The answer is yes. Because as per the definition, the manager is not required to be the director of the company. So two situations, very clear, and I can recall that there are questions which are based on this concept, and even explanation is given in the material about the same concept. Akshay is additional director in Twinkle Limited, having substantial powers of management of the company. Can he take the job of the MD? So we have seen the definition of MD, that he has to be director. That means he is a director. As I mentioned, not necessarily that a particular type of director can only become an MD. So he can be any director. And he has got the substantial powers of the management of the company. Therefore, we can say that he can take up the job of the MD. Akshay is MD but ceases to be director. Can he remain MD? Again, remember, to become an MD, it is a compulsory that he has to be a director. So if he ceases to be a director, now why will he be is not eligible to become a director? For obvious reasons. He may be disqualified under 164 for any other reason. So can he remain MD? The answer is no, he cannot remain MD of the company. So is there any option to continue the services of Mr. Akshay? Because we feel, the board feels that the Mr. Akshay has got the talent to run the company, has got the relevant experience. So can the board of directors have an option to continue the services of Mr. Akshay? The answer is yes. How? He can be designated as the manager. He can be designated as the manager, because for a manager, you don't require that person to be the director of the company. I think these examples will further, strengthen your concept and probably give you the practical ways of managing or planning about the person appointment of the KMP. So after understanding the basic definitions of KMP and the associated issues and concerns regarding the person, let us now move to section 196, which is the most important section in terms of appointment of the KMP, that is managing director, manager, and the whole-time director. So let us understand the various combinations possible in 196.1. So 196.1 purely says that you cannot have a managing director and manager at the same point of time. Under section 196(1), it says that you cannot have at the same point of time appointing a manager and an MD together. As we have already understood the definition, that because both the people perform the same kind of function, so obviously it is not required to have two people doing the same kind of functions in the company, because we know that these are people who are senior, key people, the cost would be heavy. So this combination is ruled out by specific provision under 196, friends. So that means the option left is what? We can have an MD plus the whole-time director, or we can have the manager plus the whole-time director. So this combination is allowed. So remember, if in a question indirect way they are putting in two people, manager and MD, 2%, so that means by default they are not in compliance with the law. So one person has to be removed, or one person will cease to perform the duty of that particular responsibility. See, we have still not come to the appointment part, that how the appointment will be done. We are just considering the conditions, the combination which is allowed as per the Act. Now, if the person is appointed, that is, obviously we'll see that how that appointment is done under section 196(4), and who is eligible to be appointed, that we'll see under section 196(3). But once he is appointed, for how long will he be appointed? So friends, the appointment can be done for a period of 5 years. Period of 5 years. Or reappointed also for a maximum period of 5 years. Now, obvious question, can we appoint a person for less than 5 years? No doubt you can, because here says the maximum period is 5 years. So the managerial person is appointed first time for 5 years, and thereafter he can be reappointed for a maximum period of 5 years. Can he be appointed for once for the lifetime? No. Please remember, you cannot appoint a person for a lifetime as the managing director or the MD. It is not possible. But can we reappoint him, and is there a limit to the number of times we can reappoint that person? The answer is no. You can reappoint that person for n number of times. For n number of times. Now, very important, whenever you want to do the reappointment part, the reappointment can be done in the last 1 year, 1 year of the tenure part. That means, for example, if the person was appointed in December 2015 for a period of 5 years, that is till December 2020, and suppose we need to reappoint that person for another 5 years, then the process can start 1 year before 2020, December 2020, that is from December 2019. We can start this process from December 2019, because it is said that reappointment only lasts 1 year of tenure. So you can do that reappointment afterwards, anytime after December 2019, or you can start planning for the same. So this is again one of the important concepts in terms of practical question which can come. Because the law permits reappointment before the end of the tenure also, because he's a key person, so that person has to plan for his future, and even the company needs to plan for the future. So therefore all the planning has to be done in advance, and to let that person know that we are going for the reappointment, or to let that person know that we are not going for the reappointment. So it is very essential to plan in advance. Therefore, this time frame has been given for reappointment part, 1 year prior to the end of the tenure. Now, you have seen the definition of the KMP. They include the MD, the whole-time director, and the manager. Remember, this 196 section applies to these three people. So what about for a time limit for appointment of the CEO, CS, and the CFO? There is no time limit, friends. There is no time limit, and the appointment can be done as per the contract, and it can be done for n number of years. N number of years, not a problem. So very important, remember, when you read the question, please get to know the type of person who is the KMP being talked about in the question. And more or less, we will be talking more from the point of view of the MD, manager, and the WTD. So the question comes in, who is eligible to be appointed? We know we have got the time period. We know that there's a limitation that we can appoint only a manager or MD. So who is the right person to fit in this particular role of the manager, MD, or the WTD? So for eligibility part, we need to, consider three sections. Obviously, I'll be covering the first two part, not the third part. The two sections are 196.3, which will talk about ineligibility, that who are ineligible to be appointed. Then there is another Schedule 5, where the part 1 of the Schedule 5 will always also list down the eligibility for those people who can be appointed as the KMP. And we have understood that for MD, you have to be a director, so its qualifications are given in 164. So from the overall perspective, you need to club 164. Let's say from the company secretary or a chartered accountant as a consulting part, you need to consider 164, 196, and the Schedule 5 to ensure whether we are complying with all the various provisions of the law. Coming to specific people of the three people which we are discussing, let us understand which provisions will fall for which person. So obviously for a manager, if he's a director, a manager who is a director, then two things, clubbed with Schedule 5. If he's not a manager, then only 196.3, because he's not a director, so 164 won't apply. For MD, both the provision. For WTD, both the provision. These all charts will, help you in understanding the concept. Obviously, when it comes to exams, you need to be more descriptive, more elaborative in explaining the points. So once you understand the concept, then you have to again learn it properly and structure it and present it. So these charts are just a reminder in short and explaining you the concept and the interlinkages between different sections. So let us understand the conditions or the criteria for appointment under 196.3 first. So 196.3 talks about that no company shall appoint or continue to appoint any person as MD, WTD, manager who is below the age of 21 years or has attained the age of 70 years, below the age of 21 years or has attained the age of 70 years, right? then is an undischarged insolvent or has been adjudged as an insolvent. Then convicted by any court of an offense and sentenced for a period of more than 6 months. Very important, friends. Very important. So, if we further elaborate on this part, first, not below the age of 70 years, so not less than 21. That is a condition, not less than 21. Very much important. Or attain the age of 70 years. Attain means equal to also. Attain means equal to 70 years. Right? Then, undischarged insolvent. Now, what is an undischarged insolvent? Where the law, where an application is pending in the court for being considering that person as an insolvent, but the court has not given that declaration. So till that particular point of time is considered as an undischarged insolvent. Undischarged insolvent. Or if he has been adjudged as an insolvent. Then he has not been convicted by a court for offense. So before we go into the other point, the third and the fourth point, let us further explain the first point, because maximum questions will be asked from this particular aspect. Other points are not that much material. So if you consider the age part, when I consider less than 21 and more than 70, the age part is very important, friends, that you need to know that if you are below 21, you will not be appointed. And what is going to... Sorry. Yes. So when it comes for the age part, I think less than 21 and more than 70, there's a lot of complication. That what is going to happen, friends, that if the person is appointed at the age of 69 and thereafter he attains the age of 70, what is going to happen in that case? What if during the course of this particular appointment, the company thinks that, he is a very important person and therefore we need to appoint that person beyond the age of 70. So these are all provisions, these are all conditions which we need to understand, and therefore the law provides for some exemption. One second. Yes. Law provides for some exemption that if you want to appoint a person who has attained the age of 70, thereafter you can do that. So, age, insolvent, conviction. The fourth point, which is missing out here, is about the composition part, where you have not made any composition with any creditor. Composition with any creditor. Now, what does composition means? Or any arrangement with the creditor? That means you have not paid any amount to the creditor. Then you will not appoint that person with as a MD. So 4 words which you have to remember: ICAS, ICAI, we all know ICS, I for insolvent, C for composition, A for age, and S for sentenced. These are the 4 words which you need to remember. The ineligibility condition for appointment of the MD, WTD or the manager part. So composition with any creditor or not making any payment to the creditor, which itself means that you are insolvent, indirectly which means you are insolvent. So these are the 4 conditions for the ineligibility part. So the age game, further explained, the moment you become 21 years, you become eligible. And the moment you become 70 years, you become ineligible. I hope you're understanding the name game. Less than 21, you are allowed. Less than 70, you are allowed. So once you achieve 21, less than 21, you are not allowed. Less than 70, you are allowed. The moment you reach 21, you are allowed. The moment you reach 70 years, you are disallowed. So, less than 70, but once you attain 70, the position will be vacated because it is said that you cannot continue the services of a person if he attains the age of 70 years. So this is an exam question, friends. That once you attain the age of 70, by default, you have to leave that position. As I said, that if you are more than 70 and the company feels that you are still young enough to carry on the businesses of the company because you're MD managing the affairs of the company, then still the relaxation is given and you can be reappointed as the MD. So what is that condition? So all exceptions, as we all know, are very important from exam perspective. So when you have attained the age of 70, if very important, SR. SR is passed in this respect, and an explanatory statement annexed to such notice for such motion shall indicate the justification for appointment of such person. So that means when you send the notice, you have to give a detailed statement that why do you need that person and why that person is important to manage the affairs of the company. Now, SR where? SR in the general meeting. Remember, SR in the general meeting. Now, it may happen that you may not get the special resolution passed in the general meeting. Then also, there is a possibility to appoint that person, provided you get a government approval. Very important things. 2 things for appointing a person above age 70. The first, you pass a special resolution and giving an explanatory statement along with the notice. Job done. But if you are not able to pass the special resolution, and then you can approach the government, the board will approach the government. Remember, application made by the board, giving again the reasons that why you need that person, the appointment of the person who has attained the age of 70. But the condition attached is that when during the passing of that, during the putting the vote, that resolution for appointment of that person, the votes cast in favor exceed the votes cast against the motion. Votes casted in favor is more than the votes casted against the motion. Very important, friends. Then the central government can appoint that person as the MD or the manager part. The obvious reason, because majority of the people want that, that is why. So remember, exam question, above 70 but still young. The following was the result for the appointment of Mr. Amitabh as he attained the age of 17. Nature of resolution, ordinary resolution, votes casted in favor 2,50,000, votes casted against the motion is 1 lakh. What is the process to be followed for appointment of Amitabh as the MD? The process. I think by this time you will be able to explain, because we have just understood the process. The process is that you need to make an application to central government. Who will make the application? Board will make the application to the central government for the appointment of Mr. Amitabh. Along with that, reasons that why you need that person. So once that is done, the central government may give the approval for the appointment of this person as the MD. Are these questions asked? Yes. The answer is possibly. There is a possibility. Now, as we mentioned, as we discussed, that for the appointment part, we have understood 196.3, ICAS, remember? I for insolvency, C for composition, A for age, and S for sentence, ICAS. I think you can all remember. Let us understand what does Schedule 5, the part 1 of Schedule 5 says about the eligibility part. It gives you additional conditions for the appointment of managerial person. The additional conditions for the appointment of the managerial person. So along with 196.3, we need to check the additional conditions. Now, what are those additional conditions? The additional conditions are that there is no imprisonment or fine exceeding 1,000 under economic offences. And which acts? There are 19 acts which have been notified. The list has been given in a module by ICAI. But if you refer to these laws, I think out of 19, you'll find that most of the laws are in your CA final course, so you can very well remember. And there are 2 acts which are not relevant. That is the Wealth Tax Act. I think that is not relevant. The BFR Act, which will not be relevant. The Service Tax or the Excise Act may not be relevant. But then new acts have been introduced, that is the GST, the Insolvency, and the Fugitive Act, which has been recently introduced in 2017 or 18. So 3 new laws have been introduced, which again are part of your exam, final exams, except for 1. So you don't need to remember all those acts, but in general, you can very well understand which are the acts. So that is 1. No detention under the COFEPOSA, that is smuggling activities, which is obviously very much understood. So the word here is no detention, right? Detention means before you are put to jail, you are detained and kept in the custody for inquiry purpose. Now remember, even if you fall under these 2 categories, there is a possibility that you may be appointed. But then for that, we need the approval of CG. Approval of CG in the above 2 conditions. And at the time of reappointment, approval is not required again, provided it does not attract further detect after appointment. So remember, these are eligibility conditions we have considered. There are 4. There are 4, remember, there are 4. Right. So first is no imprisonment, no detention. Third is managerial person should be resident in India. Resident in India. So if you want to remember the short form, there are 4 conditions, but the short form here I have given RED. But these contain only 3 words. The 4th one is common, so I have ignored that. We'll come to the 4th part. So R for resident, I for imprisonment, and D for detention. So you get rid of these things. So managerial person should be resident in India. So obviously, so if you are resident in India, you are eligible. And includes, that means it is an inclusive definition. So by default, a person is born and brought up in India, he by default qualifies for it. But this person, resident in India, will also include a person who has been staying in India in the last 12 months before the date of appointment for business, vocation, or employment. So that means he has been in India for the last 12 months, and thereafter he can be appointed as the managerial person. Not necessarily he may be a resident in India. So it is an inclusive definition. Now, why this particular definition has been including these kind of people? For obvious reason, you get a lot of talent even across the world. We all understand the importance of globalization. So to attract more talent and to include a wider involvement of people having different experiences, this particular provision has been included. In case of a SEZ, a person non-resident in India, remember, is a specific situation. Can be appointed, but he will be allowed only when he has got an employment visa from the Indian embassy. Let's say a person based in US who wants to be appointed as an MD in a company, especially in a SEZ, then he will be allowed to do so, provided you get an permission from the Indian embassy, and you will be required to furnish all the documents, including these 3 documents. So that is very specific, remember, for cases under SEZ. Right. So, going back again, these are the eligibility conditions under Schedule 5, Part 1 of Schedule 5, which tells that a person can be appointed if there is no imprisonment, no detention, he is a person resident in India, includes these many people, exception to that particular clause of resident in India. In case of a company, NRI can also be appointed. And the last category is the age, which we have already discussed, less than 21, 70. Less than 21 and 70, which is a common clause again in 196(3) as well as in Part 1 of Schedule 5. So that is why I have not taken this word under the mnemonic RIT, R-I-T. Covered 196(1), which talks about, the combinations. Manager cannot be, MD and manager cannot be appointed at the same time. 196 talks about the tenure, 5 years, and the planning can be done 1 year before the reappointment can be done. And 196(3) talks about the eligibility conditions along with Schedule 5, ineligibility and eligibility conditions along with Schedule 5. Okay, an example, just to give an example of the detention part, where we have understood that if a person has been detained or imprisonment has been given to him, then the CG, with due approval of CG, we can appoint him. So he has been detained in 2013 under the Act. Central government approval has been obtained in 2014. Appointment of MD in 2015. And then again he's been reappointed in 2020. Do we require a central government approval in this case? The answer is no. No CG approval again. Why? The law says once an approval has been given, the approval will be deemed for subsequent reappointment. Condition, he has not been violating the conditions of Clause A and B again. So if he has been detained again back in 2013 18, then again we have to approach the central government for the approval part, right? So coming to the whole process of the appointment, we have understood 196.3, the conditions. Now we come to the process of appointment. So how will the process start? Somebody applies for an MD position, or the company recruits or finds a person and wants to, to appoint as a MD. So the process will start from where the profile will come to the company, and the NRC, the Nomination and Remuneration Committee, wherever applicable. Obviously, it is not applied for each class of company. So your mind should start ticking. So when you're talking about each class of company, that means all these provisions will apply to a private company, a government company, right? We'll come to that. There are specific provisions for that. So recommendation by an NRC committee wherever applicable. So once the recommendation is made, then it will be put to the board for approval, where the board will decide on the terms and conditions and remuneration. Three things: the terms, the conditions, and the remuneration payable. That has to be decided, approved by the board. Once it is approved by the board, in the subsequent general meeting, it will be put for the approval by the shareholders. And when the shareholders will come in, remember which kind of resolution, there is no mention, so ordinary resolution can be passed for appointment. But in practical, the question may come that the person is above the age of 70, remember, then in that case, you have to get special resolution, friends. Special resolution. Remember, special resolution. And thereafter, you can go for approval of the central government. Now, why does the central government approval is required, friends? Remember, central government approval will be required if he is not fulfilling the Part 1 conditions of Schedule 5. Remember, because these are the additional conditions. So if you are not fulfilling those conditions, then you need to apply to the central government for such approval. So where is central government approval required, friends? Under what situation? Under two situations. Exam question. When is the central government approval required? So under two situations, central government approval is required. First, when the person is going beyond the age of 70, has attained the age of 70. And second, when you are not fulfilling the conditions of the Part 1 of the Schedule 5, then also we require the central government approval. Remember, exam question, when do we require central government approval? Once you have appointed, you need to file the forms. So there are different forms, remember. Form MR1 within 60 days of appointment, when it is passed per Schedule 5, within 30 days of, and then MR2, when the approval has been given from the central government. So MR2 has been prescribed in which application for seeking approval has been to be taken. Then MR2 has to be filed to the central government within 90 days of such appointment. Right. So one form MR1 to the MCA part, and for applying to central government, it is MR2. So appointment at a glance, just for the review part. If it is as per Schedule 5, not a problem. Just go ahead, no CG approval, appointment of the board, obviously then MR1 in 60 days, and then approval in the general meeting. So sequence of steps to be followed. But if you are not as per Schedule 5, or if you have attained the age of 70 and you haven't passed a special resolution, if you have not passed a special resolution, then CG approval is required. So CG approval, appointment by the board, MR2 in 90 days have to be given for CG approval, and thereafter the approval in the general meeting will be taken up. So I hope this process is clear regarding the appointment part. So what are the possible questions? The possible questions are, First, the process, what is the ideal process for appointment? You can obviously start from the NRC committee to the board, to the shareholder meeting, and thereafter you can break it into two parts, the approval of the CG and the filing of the form if required, right? That is the possible questions under the appointment part. Very simple. It's more of a procedural part, so not at all a complicated one and nothing in detail to be understood. So as I mentioned that, there are situations where you are ceased to be designated as MD, manager, then what can happen? Now, what could be the possible situation when the approval is not given by the shareholders? The board may have approved, but the shareholders have not given an approval. Then the appointment ceases to be valid. Appointment ceases, but the act before such approval, whatever act has been done by that particular managerial person, KMP, will be valid. Remember, you cannot deny the acts done by that person. So this is very important and very relevant from exam perspective. Let us take one example about this scenario. So Mr. Rao was appointed by the board on 12 June 2020. Remuneration was fixed at 50 lakhs. The shareholder meet was organized on 22nd December. Because of obvious reasons, COVID, the shareholder meeting could be organized only 22nd December, where the approval was put to vote for the appointment of Mr. Rao. As the company was running into losses, the shareholders did not approve appointment of new MD. In the meanwhile, during this last 6 months, Mr. Rao executed contracts on behalf of the company in October 2020 and in December and on December 22nd also. Discuss the validity of such contracts. So as per the law 196(5), we know that all the acts before such approval had been denied, before such approval is denied, will be valid. So all contracts in October 2020 are valid. But on the date where the approval is not given and subsequent to that he has entered into a contract, those contracts will not be valid. So non-applicability of section 196. So 196(4) and 196(5) not applicable to private companies. So they do not apply to private companies. But then 196(3), the eligibility condition, the tenure part, they all apply to private companies, remember. So the appointment criteria, the tenure part, they will apply to private companies. But even the tenure part, 196(2), will not apply to government company, right? So just let me check if there are any questions. For the condition part, for the government company, remember, this section will not apply. Only if they have not defaulted for filing of the annual returns and preparation of financial statement as per section 137 and section 92 with the registrar. The next important part in this whole appointment part is section 203. So we have completed one part, friends, that is 196, which talks about appointment of the managerial person. Now we'll talk about the compulsory appointment of the KMP, read with rule 8 under specific situation. So under this particular section 203, which also again talks about the appointment part, it says that if a company is a listed company, then it is compulsory for the company to either appoint MD, CEO, manager, or whole-time director. They have to appoint one of them. Can we appoint more than one? Obviously, MD manager cannot be clubbed, but then MD, whole-time director, it is a possibility. Then along with that, they can appoint a CFO. They have to appoint a CFO and a CS also. For a public company, again, it is compulsory to appoint the MD, CEO, manager, or whole-time director along with CFO and CS. And a very important change which has been brought in, obviously for listed public, we all know the reasons that why do we need that. That's not a problem. But for another important clause, that is a private company, the clause has been mentioned that a private company having a capital of more than 10 crores, they have to appoint a CS. They have to appoint a CS as a compliance officer. So remember this particular slide, the chart, the graph, not the graph, but the chart or the picture, that who is required to appoint whom. Now, the conditions to appoint the whole-time KMP, conditions are simple, that we need a board resolution, and the resolution should contain all the terms and conditions of the remuneration and the appointment part. So by virtue of section 203, these are compulsory requirements read with the rules of the appointment and remuneration of managerial person. So what are the possible combination situations which may arise out of this particular section 203? So can there be a manager and MD in the same company, which we have already understood? No. Can MD manager be MD of more than one company? Exam question. So let's say we have one person who is MD of A, company X. Can he be appointed as MD of company Y also? The answer is yes, and we'll understand the various clauses for that. We have to give a specific notice, and it should be a unanimous board resolution. Can the chairperson, the chairman of the company, be appointed as a MD, manager, CEO? Prima facie, the section says no, but yes, subject to certain conditions. We'll understand those conditions. And last, whether the whole-time KMP, if a person has been designated as a whole-time KMP, can he be appointed a KMP in other company? The answer is no. He cannot be appointed as a KMP of other company, except the subsidiary. This is an exam question. Remember, this particular point is an exam question. So that means a KMP can be appointed in the subsidiary as the KMP, whole-time KMP, not a problem. But he cannot be appointed a KMP in either company. Can he be a director in any other company? Answer is yes. There's no limitation of being a director, but you cannot be termed as the KMP of other company. So what are those specific situations? Let us understand these 2 points in detail, where MD can be MD of 2 companies, and can a chairperson be a MD, manager, or CEO of the same company or not. So, can the MD be appointed as MD of more than one company? Yes, ye dil mange more for obvious reasons. So the answer is yes. The condition is that such appointment or employment is approved by a resolution passed at the meeting of both with the consent of all the directors present in the meeting. Present in the meeting, right? So if the person is absent, we can do away with that. And for getting the resolution passed in the company, specific notice of such meeting has to be given, and also of the resolution. And all these points should be given to all the directors. That means, obviously, notice is given to all the directors. So, notice has been given, and that this resolution will be moved in this particular meeting, will be specially mentioned, and a unanimous approval of the directors who are present in the meeting has to be taken before we appoint an MD who is already an MD in some other company. The other situation, can a chairperson be the MD? The answer is yes and no. Prima facie, he cannot be appointed as the chairperson of the company. As well as the MD. So he cannot be done. So same way, the MD cannot be a manager, so chairperson cannot be MD. Unless, so there are exceptions. And the exception says that the articles of such company provide otherwise. That means the article has made provisions for the same. And the company does not carry multiple businesses. So in case of Reliance, a possibility may arise. Because Reliance is multiple business, ITC is multiple business. There are so many companies which are carrying on multiple businesses. So therefore, under that situation, it may be possible. Obviously, subject to fulfillment of certain conditions. So what is this exemption? What are those conditions? So the prohibition that a chairperson cannot be appointed as an MD will not apply to such class of company which is engaged in multiple businesses and which has appointed one or more CEOs for such businesses. Right? So there has to be a compulsory requirement. A CEO has been appointed for multiple businesses. In that case, the chairman can be appointed as a CEO or the MD. Right? So first is where the articles allow it. The articles have a provision that the chairperson can be the MD, and where the company belongs to prescribed class of companies. Now, which are those prescribed class of companies? So the government has come up with a notification which will tell the prescribed class of companies on which this particular provision, the restriction may not apply, provided they have. The condition is they should be involved in multiple business, and they have appointed a CEO for these multiple businesses. So a company having paid up capital of 100 crore and turnover of more than 1,000 crores. So engaged in multiple businesses and CEO has been appointed. Then a chairperson can be appointed as an MD. So friends, remember, I think all the exceptions are more likely to be asked in exams if they are to be asked. So we should pay extra attention to all these exceptions part. So if you recall all the exceptions, you will get to know the exceptions are what? What are the exceptions? So I'll just again introduce one slide just to recall those exceptions for all of you. So remember, exception, age 70, right? Then non-fulfillment of conditions is an exception. MD more than one, exception, obviously with the conditions attached. Chairperson plus managerial person is an exception. So friends, these are certain exceptions which you need to remember. And I'm sure one questions from this exception. The process of appointment of the whole-time KMP, again the same part which we have discussed under section 196 subsection 4, which talks about the process of appointment of the KMP. The board shall appoint the whole-time KMP and approve the terms and conditions. So it is by the board, the appointment will be done. Now, very important, the vacancy of the whole-time KMP has to be filled within 6 months. So that means a listed company, if it is not having a CFO, it has to be done within 6 months. If the listed company is not having a company secretary as a compliance officer, it has to fulfill it within 6 months. And one of the requirements under LODR has been there that the chairman person of the top 500 listed company shall be a non-executive director. Right? So that is an additional condition, especially for the LODR regulations, which you can obviously study in the LODR part. But that has been recently introduced to make things more independent. The implementation of corporate governance in all these companies, especially in the top listed companies. Obviously, without this clause, any section or any chapter is incomplete. And that is why all compliances are very much required. So friends, the penalty part, how much relevant from the exam point of view? But yes, from MCQ point of view, these are relevant. So if the default has been done by a person, if they are not able to comply with any of the conditions mentioned above as an individual, then the every defaulting director in the KMP shall be liable for a penalty of 50,000 rupees and with 1,000 rupees per day, maximum of 5 lakhs. And if the default is by the company, then up to 5 lakh rupees, right? So these are the kind of penalty provisions which are there for sections non-compliance under the relevant provision. Then certain procedural issues have been highlighted within the whole gamut of sections from 196 to 205 because there are provisions where we need to apply to central government, which we have seen for approval part. So how to do that, in what form, that specific process has been given under section 201, more of a procedural part. So as we have discussed, we need to apply in MR2. And how do we do that? So the company shall issue a general notice to all the members that they are making the application, and application or the notice shall be in English and vernacular language, not a problem. Then when you make the application, obviously you have to attach the notice which you have already published in the paper part, and this MR2 will be filed in 90 days, which we have already discussed when we talked about the appointment part, when you are not following Schedule 5, Part 1 of the Schedule 5. So the appointment has to be done within a period of 90 days. And we have seen that central government approval is required under 2 situations, above 70 and when it is not in variance of the conditions of Part 1 of the Schedule 5. Remember this slide. When do we require central government approval? Right. Just 1 second. Which talks about secretarial audit, which has been introduced very late. But yes, for our fellow professionals, company secretaries, a big time opportunity has come in, where there has been a requirement under specified class of company that they have to attach a secretarial audit report along with the board report. And that is to be given by a practicing company secretary. So to which class of companies does it apply? So you need to remember the class of companies that may be relevant from exam perspective. So a listed company, public company having paid up capital of 50 crores more, or a public company having turnover of 250 crores more. At times it becomes very confusion because in different clauses there are different amount which have been designated, but you cannot help it because in one of the previous clauses we understood the appointment of the whole-time KMP compulsory. So listed public company and a private company having paid up capital of 10 crores and more. So, and then there are a specified class of companies where the chairperson could be appointed as a CEO. So the criteria was around 1,000 crore and a paid up capital of this much. In that case, the chairperson could be appointed as the MD or the CEO. So at times it becomes confusion, but yes, you can do the listing part and then try to map the turnovers and the criteria. So as required that in the normal audit report, financial statement audit report, if there is a qualification, the board shall explain in the board report the reason for qualification. Same concept applies here. The board shall explain in the board report about the qualification made by the secretarial auditor. And in case of default, obviously the penal clauses is there about for not less than 1 lakh and which may extend up to 5 lakh. So 5 lakh is the upper limit which we have seen in the previous penalty section also. There was the 5 lakh is the upper limit. So here also the limit is 5 lakh. Now this is all, all these secretarial compliances, they have been introduced based on the Kotak committee recommendation. I think Mr. Uday Kotak was made as the head of this particular committee. And he has given a lot of recommendation in his report. And thereafter, this particular compliance report was introduced. And this compliance report is required to be submitted to all the stock exchange also from the end of 60 days within the end of the financial year. So that's why this secretarial audit report has gained importance over a period of time, which truly ensures compliance of the various provisions of the company law. And we have seen that the company law has evolved and a lot of compliances have come in. And thereafter, this PCS, the company secretarial audit report, will give us the areas where the company is deficient or not being able to comply with the various laws. So friends, this is one part which we have tried to cover is about the appointment of the managerial person. Appointment of the managerial person covering section 196 and 203. Primarily, these are the two major sections. Along with that, the smaller section of 201 and 204 talking about the secretarial audit report. So before we jump on to the next topic, which is more calculative and more in detail to be understood, that is the remuneration part. But first, let us go through some basic questions which has to be understood, the MCQ part, and then we'll cover the descriptive type of questions so that you have a grasp of the overall subject and the level of questions which are asked in exams and also the type also. So here we go with the first part, the MCQ part, and then the descriptive questions will come in front of you. So these are simple questions. I think if you refer to all the sections, if you are watching this live, I think you can keep the module in front of you and or any other material. I would always prefer to have the module in front of us so that you can answer it along with me so that you have a real-time grasping of the whole concept. So the term MD as defined by the Companies Act means, so here the question is about the MD. So MD means a director. That is the first thing which we have understood. So in all the cases, there is a director. So by virtue of articles is entrusted with the substantial powers, which we have seen that MD is a person by articles of association or by an agreement. Yes, or by virtue of resolution. So these are the 3 points. So I think these are all the 3 points which are included in the definition of managing director. So obviously the correct answer is all of the above. Yes. The term manager as defined by the Companies Act means, so the term manager means, if you recall, is manager a director? Not necessarily. So what you can do, you can review the options and see if there is a compulsory mentioning of the word director. If there is a compulsory mention of that director, obviously you can leave that particular option. So the term manager as defined by the Companies Act means a director, not required, not compulsory. A director, not compulsory. An individual who is subject to superintendence and control and the direction of the board as the management of the whole or substantially the whole of the affairs of the company, which we believe is more appropriate definition. Therefore, A would be the correct option. All the MCQs, I think they give you an understanding of the subject in detail. More conceptual clarity comes in. The KMP in relation to company, do not include which of the following? Do not include, right? Remember, normally these are times where the confusion comes in. So, not included is who are not included. We have seen these words, and you can hear it from me also. The CEO, the CFO, and the manager. So I have never mentioned the word who. So we can leave this particular option. So as the question is, do not include, therefore who is not included. Every whole-time key manager or person of a company shall be appointed by means of a dash containing the terms and conditions of the appointment, including the remuneration. So we know that it will be appointed where the first appointment will be done at the board, yes, and thereafter it will be passed in the general meeting. So the first appointment has been done in the board. So will the NRC pass a resolution for the same? No, the NRC will only give a recommendation. The NRC will only give a recommendation. Remember, the NRC will never appoint that person. So NRC will give a recommendation. So the resolution has to be passed at the board level and thereafter in the general meeting. So the correct answer is A, resolution of the board. I hope you are able to recall all what we have studied so far. Where an appointment of a managing director, whole-time director or a manager, remember these are standard things which will come, is not approved. Please do not try to skip, remember all these MCQs do carry certain words which either attract your attention or they are not covered by your eyes. Because that is by default nature inbuilt within a mind. Our eyes read what is in our mind, and in our mind we read the section as these are the things which are required, not these are the things which are not required. Remember, so our mind will always try to find out what, our eyes will always look for what is in our mind. That's the mental trick which these MCQ plays. So remember, you need to highlight those words which are working against your mind. So not approved by the company at a general meeting. Any act done by him before such approval shall be considered as. I think we have discussed this particular question with an example also. October 2020, December 2020, 22nd December, if you can recall that particular example, where I had mentioned that all acts done by him before such approval is not granted are valid. There is no such ratification required from either the board or the audit committee. Is vacated. Whole-time KMP is vacated. The resulting vacancy shall be filled up you remember I have mentioned that point that we have to appoint fill the vacancy within a period of 6 months. There is no such other criteria. It has to be filled up within 6 months. There's no such criteria, whichever is earlier, whichever is later. It is very specific. Since the day the vacancy, the position has become vacant, you have to appoint within 6 months. Company shall file a return of appointment of MD, full-time or manager within these days of the appointment with registrar. Inform number. I think we can go and refer that what is the number of days. The number of days was 60 and the form was MR1. MR1 in 60 days. As per Schedule 5, the appointment is done because we don't need to go to the government. So MR1, if we need to go to the government, it is MR2. Days MR1. The company wants to appoint Mr. X aged 20 years. I think conceptually everybody is clear on the age part, no confusion. Too young, he should stay at college or do CA. First complete, experience the heavy books by ICAI and understand all the compliances part, rules, and understand the importance of May, November. Then give you an example, 5 years, December 2020, December 2019. I think it was very clear the time period that they cannot be reappointed because you need to give them time. So that is why this flexibility is given. So the flexibility has been given of 1 year. So 12 months before the expiry of his term. Yes. Okay, so a very specific question on the number of appointments a person can take. So Primus group of companies have 3 companies, rolling mill, steel and marketing company. All the 3 companies want to appoint Mr. Prem as the managing director. State with reference to the provision of the Companies Act whether such appointments are permissible. So we know that as per law that appointment can be done only in 2 companies. So he cannot be appointed as MD of more than 2 companies. Yes, and that too, remember the conditions when he can be appointed in more than 2 companies. Remember the condition where you have to give a specific notice and that has to be approved by all the directors present in the meeting. Thereafter, he can be appointed only in the same company, right? I think you can very well highlight this. Detention, you remember this word, detention, R-I-D, right? Detention, if you remember that word detention, I think that is very clear. So imprisonment, detention and resident, and detention is the COFEPOSA. A. It is not the designation but the powers interested that defines a managing director, which we know. By exercising which of the following powers the director can be considered as a managing director? Good. So let us see the powers which have been given. The power to affix the common seal. Draw. Share. I think we had discussed and highlighted these points earlier also. So these three actions would not make you the annual director. So therefore, the answer is none of the above. None of the above. The KMP in relation to a company would include whom? Sorry, but a chartered accountant is not a KMP. Yes, cost accountant is not a KMP, but company secretary is the KMP. Why? Because the secretarial audit is a very important angle. Therefore, he is considered as the KMP. Whole-time KMP shall not hold office in more than. So a whole-time KMP, if you are able to recall, whole-time KMP shall not hold office more than one company except in its subsidiary company, two company except in its subsidiary company, one company except in its wholly owned subsidiary company, two company its wholly owned subsidiary company. Remember, the word is not KMP but whole-time KMP. See, if it was only KMP, then I would have given him the permission to be appointed as a KMP for another company subject to the approval. But when I'm mentioning that is a whole-time KMP, that means you cannot hold office more than one company, except in a subsidiary, not necessarily wholly owned subsidiary. It's just mentioned as a subsidiary company, right? Option A. Company wants to appoint Mr. Mr. Age 71 years. 70 saal se upar, he's gone beyond 70 years. So we know that we need to either get what? Remember, friends, either get SR or OR plus CG. Right? You can recall that SR or OR plus CG. So if we get a special resolution in general meeting, it's fine. That will do the job, because ultimately it is the shareholders who will decide that whether we want that person or not. So if they give the permission, fine. If they are not able to give the permission by SR, then through OR plus CG approval, we can do that, provided specific explanatory statement is given that why we need that person as the MD part. A listed entity shall appoint I think we all know, qualified company secretary as a compliance officer. Right, friends? So we have gone through the MCQ questions, and we have covered this 196. So we take a short 5 to 8 minutes break before we go on to the descriptive type of questions, and we'll go through 4 or 5 descriptive type of questions, and then we'll jump on to the next topic, right? So we take a break. Welcome, my friends. Let us move ahead to the descriptive type of questions after understanding the MCQ part. So here are a few which probably either have been asked for in the past or taken from the various material of ICAI. So the question goes like this. There are 4 directors in a company, 2 Square Limited. Mr. Rao, being the director in station, has been authorized to draw and endorse the check because he's stationed out there at the location. Whether as per the provision of the Companies Act, he'll be treated as a managing director or not. Also narrate the procedure for appointment of MD in a company. So, though the question is very simple, but when it comes to descriptive type, we know that there are certain complications in writing the answers, along with quoting the prime words which are required to decipher the whole interpretation of the section. So we understand now by the provisions of definition of managing director under section 2, where the MD has been defined and explanation has been given to that particular section 254, where 2 subsection 54, where certain actions have been not considered as actions which could give him the power to manage the affairs of the company. And one of these are the transfer of shares. So now we understand that by virtue of this, he will not be regarded as the managing director. The question is, how do you present it? And the next is the procedure for the appointment. So here are 2 sections which we are talking about, 254 and the appointment part, that is 196.4. So the more important aspect is the presentation angle. So there could be a possible way of the presentation is that you can interpret the case and explain the section, relevant section, where we can always quote what is given in the question, and along with that quote the relevant section where it mentions that section 254, Mr. Rao will not be treated as the director because he's doing the administrative acts of the routine nature. And the procedure, as I said, is in 196.4, that the procedure starts from the NRC committee, approval of the board, approval of the shareholders, and not fulfilling the conditions, then approval of the central government, and then filing of the requisite form to the registrar, that is MR1, within 60 days. Yes? So that's the process which you have to list down here. So very simple, straightforward question carrying 4 marks, easily scorable, and I'm sure if these are the types of questions asked from this topic, you can understand that this particular chapter number 2 is a highly scoring chapter. So we need to explain all the process that if the appointment is not as per Schedule 5, then CG approval is required. Though we don't need to quote down all the conditions. It depends upon the the marks of the question. So if it was a 8-mark question, then you could explain the conditions of the Schedule 5 also. But here the focus was not on the conditions for eligibility of the appointment of the MD, but more on the administrative job which he was doing. The second descriptive question was a complaint was received by the central government from the shareholders of a public company that a person has been appointed as the MD of a company without seeking of the approval of the central government when such approval was required. State as to what action can be taken by the CG under the Companies Act. Also examine the validity of the acts of the managing director. Now, those no specific section has been quoted that under which particular section he is not eligible to be appointed as a managing director, or is not complying with particular provision. Therefore, the CG approval was required. But we assume that he is non-complying the conditions either of the resolution to be passed at the general meeting. Therefore, the approval is required of the central government. Either we can think of that condition or the conditions mentioned in Schedule 5. Now, the question is, what action can be taken by the central government under the Companies Act? I think under all these sections of 196, we have not seen any provision which calls for a specific action by the central government if the approval has not been taken. So obviously we have to refer to some other provisions in the other sections which may be given, where, or we can refer to the Schedule 5, where it may be given that, the conditions are, if the approval is not taken, then the central government may. So here again, assuming that they are not in terms of Schedule 5, therefore the CG approval is required, is not taken it. So the central government make a reference to the NCLT for inquiry, and the NCLT may give a show cause notice, which was earlier the Company Law Board. So that is the action which the central government can take, and the NCLT can either terminate the appointment, because that may be the contravention of section 196, and the person who can be held responsible for the contravention can be levied penalty. As we have seen, there are penal clauses. But the question is more about the act part, which is very relevant, and we have seen that if the approval has not been granted, but the acts done by that MD till the approval has been granted or not granted will be considered as valid as per section 196(5). So that is one thing which is very much required. I think yes, no other question was asked. That is the final answer. So we can limit our answer that what is the action to be taken and the validity of the actions taken by the MD. So that is 196(5), and here it was about the definition of 254. Another descriptive question. X was appointed as MD for life by AOA, Articles of Association, of a private company. So two words which comes into MD, life, private company. Dates may be not material in this particular question. The articles also empowered X to appoint a successor. X by will appointed G to succeed him after his death. Examine in this connection, can G succeed X as managing director after the death of X? Again, if you review whatever we have studied, probably there is no such provision given as for the assigning of a particular position in will. So by will, you are trying to assign a particular position to your successor. Though there is no specific provision, but by virtue of logic, we can always tell that it should not be allowed. Is it possible for the company in general meeting to remove X from his office of directorship during his lifetime? So that we can always see whether the appointment for lifetime is valid or not. So we can refer to section 196(2), which always tells that the appointment can be done only for 5 years. So this is not as per law. So the first thing, the appointment cannot be exceeding 5 years. Even if it is a private company, because under for a private company, remember which particular sections do not comply, as I mentioned, 196(4) and 196(5). Those particular provisions would not apply to private company, but 196(2) would apply to a private company. It may not apply to the government company. So there is no exception to the private company also. So the descriptive answer could be relevant sections is what 203 and 196. Why 203? We'll come to say. 169 is again a separate section, but again because it is relevant because it relates to the assignment part, so we need to refer to 169. So 196(2) lays down the tenure, and 196(4) talks about the conditions or the procedure for the appointment also. So we refer 196(2) and 196(4), and 203 and 169 gives the power to remove director. That is why. So we are referring to 169 and 203, where a person could be removed as a director before the expiry of his period, after obviously giving an opportunity to be heard. So by virtue of this section, we can always remove this director. And by virtue of 196(2), no person can be appointed for a lifetime. And there's no possibility of assignment, as 166 also prohibits the assignment of office of that director. So when you see it from the holistic point of view, as I said, you need to relate all these sections. It is not only about 196 to 205, because here the question comes of director. So when the word director comes in, you have to start directly from the basic source of 160, 164, and then so on. So whatever provisions apply to director, you have to take in cognizance of those sections, clubbed with 196 to 190 more and 203. Another descriptive question is about managing director is appointed in the board meeting held on 20th May 2019. The general meeting was to be held on 17th June for approval of such appointment. Before holding of the GM, the managing director executed an agreement with another company on 3rd June 2019. The general meeting was held on 17th June but did not approve whether the executed contract by manager is valid or not. We have understood all the provisions and we can always plot all the dates, and we know that all the actions of the MD would be valid till the approval is done. So explain the section 196 in detail, giving the various reasons why the actions could be taken as valid. 196.5. Another descriptive question. Sukarna Limited, a company incorporated under the Companies Act, approved the appointment of Rajaraman as the MD in the company's last AGM. He was vested with substantial powers. After a period of 1 year from the appointment of Mr. Rajaraman, the company wants to employ Mr. Rakesh, the whole-time employee of the company, as the manager of the finance department. Then the company is in dilemma regarding the appointment of Mr. Rakesh. You, as a qualified chartered accountant, are advised to give your expert opinion to the company regarding the appointment of Mr. Rakesh, considering the provision of the Companies Act 2013. I think this is a very straightforward question. People, all the students out there should be able to answer it. Just give it a thought and recall whatever we have studied so far. And you can very well relate that we know the provisions that the MD and manager cannot be appointed at the same time. So we have Mr. Rajaraman, who is already appointed as the MD of the company. Thereafter, the company is thinking of appointing Mr. Rakesh as the manager of the finance department. Now, appointing a person as a manager of a particular department does not cast him or gives him the responsibility of managing the affairs of the company or substantially the whole of the affairs of the company. So can we regard this person as a manager? That is the question. So by virtue of definition, we can always say that it is not covering the substantial affairs of the company. Therefore, by virtue of definition 253, we cannot consider Mr. Rakesh as the manager. And because Mr. Rakesh is not the manager, there is no limitation of appointing Mr. Rakesh as the manager of the finance department, because there is no restriction on appointment of n number of managers of a particular department. And there is no such conflict between appointing an MD and a manager of a particular department. So the company taking an expert opinion from you, you can very well say that you can appoint that person as the manager of the finance department. So taking a cue from all these questions which we have discussed regarding descriptive type question, so I think the major focus would be on section 196(3) and 4 is more procedure. 3 is again the eligibility condition. So 3 is important. and then the basic definition part. 203, 204, or 205 may not be that much of relevance. It is more of a direct question which can be asked, that what are the provisions for appointment of whole-time KMP and specified class of companies. But anyway, you cannot take a risk because it is exam. So I would suggest to cover all these sections, and because they are very easy to remember also, and not much of case laws, not of complicated case laws will be there for you to answer it. So we have covered the MCQ, the descriptive type of questions, and the syllabus sections. Let us move on to the next angle, friends. As I said, there are two parts of this whole chapter. The two parts are the appointment part and the managerial remuneration part. So we'll be covering the managerial remuneration a little bit in this particular session, and the rest of the practical questions, MCQ, in the next session. So here we'll try to cover certain basic concepts, and we'll try to again recall those concepts in our next session also. So when it comes to remuneration part, which we are all concerned about, yes, we are all concerned with the remuneration part, and why shouldn't we? After all, we are becoming chartered accountants to do good to the society, and along with that, earn something for ourselves also. So remuneration part is covering the various provisions, where we have the basic definition and what is the remuneration. Then two major sections, friends, 197 and 198, and along with this, all these schedules are always, trying to bring barriers to the flow of our process, and they give additional burden to, as a student, I think that's an additional burden. But yes, all these schedules are very important because they give certain more extra clarification and guidelines in compliance part. So 197, Schedule 5 and 198, very much relevant. This is all, as we understand, is remuneration, that is the calculation, as I've given in the heading. So remuneration as defined under section 278. At times we do feel that what kind of remuneration should be appropriate. Even for chartered accountants, we also feel that at different point of time that what is the appropriate remuneration, and somewhere somebody could define that remuneration. So in Companies Act, you get this definition, but we all understand in life that remuneration is not only the major criteria, it is more of what you do towards others is more important, as we see in yesterday's win against Australia, where where few of the cricketers who are in the Indian team have done wonders in spite of passing through a tough times. And if you read their story, you will find that there are people who have really done wonderful job in spite of odd times and a lot of ups and downs in their life. So don't take only the remuneration as the final motive. I think there are something more hidden behind this remuneration word. But anyway, let us come to the specific calculation part. So it means any money or its equivalent given, right? So it's not only about direct money, but it's also about something extra which is given to you or passed on to any person for services rendered by him, and includes this, which has been defined under the Income Tax Act. So perquisites as per the Income Tax Act. So under this, as I mentioned, we have to cover 1797, which talks about what is the amount of remuneration to be paid if there is, this word, adequate profit, and what is the amount of remuneration to be paid if this is the word, inadequate profit. So section 197 by default says that, the company are there for exerting profit. So therefore, if there is no profit, that will be an exception given in a different schedule. So it is not covering the flow of sections. So if there is an adequate profit, then how do we calculate that profit? Section 198. So the percentage part is given out here. The calculation of profit is given under section 198. And what will happen if there is no profit? We will refer section 2 of schedule 5. which is again a very broad schedule covering different angles. Section 1, Section 2, there are different sections. Schedule 5 has different angles. There are Section 1, Section 2, Section 3. We'll be covering all those sections in due course of time. And within each section, there are different subsections, or you can say refer to the section also. It is not Section 2. I'll refer to as Part 2 of Schedule 5 rather than referring to Section 2. Part 2 of Schedule 5, and under Part 2 of Schedule 5, there are different sections. So broadly, what does remuneration says? Remuneration to whom? So remuneration to all the managerial person. So we'll understand that there are managerial person. So we need to understand that what is the amount which can be paid to all these managerial person, which will include the CS, the CFO, the MD, and the manager, and the WTD. And within these, there are the specific managerial person of MD, manager, and WTD. Then there are non-executive directors. So what about them? What are what they will get? So all these explanations are given under this section 197. So 197, which broadly covers the amount which can be paid, the overall limit which can be paid in terms of the payment to all these managerial person. And it starts with saying that the total managerial remuneration payable by a public company. That means it does not apply to private company. Section 197 does not apply to private company. What reason? See, for a private company, you pay unlimited amount because it is held privately. So they know what is best. So you can pay unlimited amount to all the managerial person. But for a public company where public are involved, the public money is involved, therefore there has to be certain cap, and there has to be certain guidelines and approvals which may be required. So the total managerial remuneration cannot exceed 11%. Agreed? So it cannot exceed 11% of what? Net profit. So two things, 11% and net profit. Remember, 197 will always talk of percentage. 197 will always talk of percentage. It will not talk about the absolute amount. Remember this. So overall, it cannot go beyond 11% of the net profit. But there are within individual limits which have been assigned. Individual limits have been given to the various type of managerial person. Now, total managerial remuneration means it will cover all types of directors, non-executive directors, the managing director, whole-time director, and so on. When it comes to managerial person, friends, so if there is one, the total payout in terms of remuneration cannot exceed 5% of the net profit. 5% of the net profit is the maximum amount which you can pay. If there is only one MD, 5%, one manager, 5%, one WTD, 5%. If there is a manager and WTD, there are more than one. It cannot exceed 10%. It cannot exceed 10%. If there is a MD and WTD, it cannot exceed 10%. If there is an MD and a manager, what? MD and a manager, we know that it can be only one. At the same time, MD or a manager, it cannot be MD and a manager. So 5%. So MD and a manager, it can be only 5%. Now this is with respect to, the MD, the whole-time directors and the manager. Remember, if you are more than one, you just double 5 and 10. 5 and 10. You just double it out, right? What in case if there are other directors apart from the managing director and the whole-time directors? There could be non-executive directors, right? Then you would say, sir, what about independent directors? We'll see to that. The relevant provision regarding independent directors, we'll understand that also. So remuneration to directors other than MD and WTD, it is 1%. If there is one manager, if there is a managerial person, that means if there are managerial person, that is a managing director, whole-time director, or a manager, then you will be eligible 1% because we are already paying something to others. And if there is nothing, in either case, then you are eligible to get 3%. That means when there is no manager, no MD, no whole WTD, then you are eligible to get a 3%. Obviously, because you are not paying something to others. So the other directors may be eligible to get a higher amount. As we have seen in 196, remember, there is always a provision to approach the central government to, or the shareholders if you want to pay a higher amount. So previously it was there in the law that we need to approach the central government for approval part, but with the recent amendment which has happened, we don't require the approval of the central government, but we require the approval of shareholder if we want to pay more than 11%. If we want to pay more than 11%, then it is compulsory that we approach the shareholders and get their approval. Right? So remember this point, and that too, which type of resolution is required in case if the individual payout is more than the required designated percentage mentioned in the section 197 special resolution. So in case it is total above 11%, just an ordinary resolution will be required. But if it is for an individual person, then it has to be a special resolution. But remember one point, friends. All this remuneration, whatever is paid to all these people, will not include the amount which has been paid for sitting fees. Or any fee which has been paid to that person for which professional services have been taken from the director, then those amount will not be included to that calculation part. So one question should come into your mind, friends, whether the MD, the manager or the whole-time director should be eligible for sitting fees. When their job is to manage the affairs of the company, so should we give them the sitting fees? So there's always a element of confusion or debate which is there, that why should sitting fees be given to all these people when they're already a part of the company. But as such, there's no such exception which has been given that sitting fees should not be paid to them. So it is up to the board to decide whether sitting fees has to be paid to the respective individual person. But we know that for all the non-executive directors, independent directors, sitting fees has to be paid. But if it has to be included, if it has to be paid, then it will not be included as a part of the managerial remuneration part. So that is 197, focusing purely on percentage of profit. Remember that. Overall, the calculation is very simple. You can remember it's 11%. 510 on 3. Then we refer to section schedule 5, which says that if there is adequate profit, then you can obviously refer to 197, which we have already done. That what would be the ideal calculation for the managerial remuneration part. And section 2, which tells about that if there is inadequate profit or no profit, if there is inadequate profit or no profit, then calculation as per the option A or B. So we'll understand what are the options given under section 2. And under section 2, we'll try to calculate the amount to be paid to the managerial person if there is inadequate profit. So we need to understand what is inadequate profit. No profit means loss. That is a very simple when there is a loss. So should we pay the remuneration to the managerial person? The answer is yes, because they have worked. But only question is how much. So that means in case of inadequate profit or no profit, it is not percentage because there is no profit at all. So that means there has to be based on certain other way of calculation, which could be an absolute also. So whatever option has been given, defined under section 2, so it cannot exceed the higher of option A or B. Remember this. So option A, option B, and the amount cannot be higher than of all the both the option. So now we need to understand what does inadequate profit means and how that calculation as per option A or option B is done. Right. So 197 talks about percentage, remember. Schedule 5, it will not talk about percentage because there is no profit, but it's giving you certain list, the criteria part. So first, before we jump into the calculation part, that how much remuneration is to be paid, let us understand what does inadequate profit means. So inadequate profit, for example, let's say Mr. Khurana was appointed as MD for a remuneration of 50 lakhs a year. Remember, it's per annum. The profit, obviously, it includes whatever is definition, what is the definition of remuneration, including the perquisites as per the Income Tax Act. The profit for the company for 1920 is 3 crores. Calculate whether profit is adequate or not. Now, how do we calculate whether profit is adequate or not? There's no such definition given, but what we do, we go by the sequence part. We go by the sequence part. Sequence means we go to 197 first because there's a profit. So we need to refer to section 197, which says that maximum remuneration which could be paid is how much, friends? 11%. So 50 into 11%, sorry, 3 crores. Three crores into 11%, which makes it 33 lakhs. So the maximum remuneration which could be paid is 33 lakhs. While Mr. Khurana has been appointed as an MD for 50 lakhs. That means the company does not have adequate profit to pay the remuneration. I hope you got to my point. Then what does adequate profit means? When you calculate it as per 197, what is the amount to be paid, which is based on profit. And when you don't get that amount, which has already been agreed in terms of the appointment letter given to that particular MD by the board, approved by the shareholders, then we will consider that this amount is not adequate. So when this profit of 3 crores is not adequate to pay off the remuneration of 50 lakhs, we need to pay the remuneration as defined under Schedule 5. Then we need to refer to Schedule 5 to pay the remuneration part, right? So what does Schedule 5 says that? Schedule 5 says that remuneration has to be based on EC, not Election Commission, but effective capital. Remuneration has to be based on effective capital, right? And it says that effective capital has given different slabs. So it is based on slab rates and not rates, not percentage, but an absolute amount. So it says that if the effective capital is negative, or less than 5 crores, then the remuneration which can be paid in total is 60 lakhs. So what is effective capital? We'll see how to calculate that effective capital. So the next slab is 5 to 100, 84, 100 to 250, 120, and then 250 above, it is 120 plus 0.01% of effective capital, which is greater than 250 crores. 250 crores, right? So this is the table which you have to remember, 60, 84, 120. So you can recall the mobile number. It could be a mobile number 60, 84, 120. Mobile number of company law. 84, 120 is the last 5 digits. So you can remember that. So this is an absolute amount, not based on any percentage of profit, except this is the percentage which is coming in. As mentioned in all the previous section, is there a provision to go beyond or an exception? Or can we go beyond this amount? The answer is yes. As in 197, can we go beyond the defined limit? Answer is yes. Where do we need to go? To the central government? The answer is no. We don't need to approach the central government. We just need to approach the shareholders, because ultimately they are the people who have put in the money to run that company. So if they agree, not a problem. So can we go above the table limits? The answer is yes, with special resolution at GM. So in the section 197 also we have seen we need a special resolution for individual limits. So we can pass the special resolution, and because here the amount the company does not have adequate profit, so therefore we need a special limit. But surprisingly, how much higher amount can we pay? How much higher amount can we pay? That's the question. Sky's the limit out here, friends, because there's no mention at what maximum they should pay. What maximum should be? See, in 197, the maximum is laid down 11%, and then it can go beyond, and they can obviously try to limit, or they can make it unlimited. So here also, the amount could be unlimited. There's no upper limit which has been defined once the approval of the shareholder has been taken. So this is effective capital based calculation of the remuneration part when you approach Schedule 5. And when you approach Schedule 5, when you don't have profit or when you have inadequate profit. So in my case, in my example, can we find out what is the amount to be paid to Mr. Khurana? What is the amount to be paid to Mr. Khurana? Answer is no. With this data, we cannot find it because there is no mention of effective capital. So if I link that the effective capital of the company is, let's say, 50 crores. 50 crores. Then 84 lakhs. 84 is the maximum remuneration which we can pay to this director, Mr. Khurana. So when my profit was not sufficient, but based on my effective capital, I could pay him 84 lakhs. So what should be paid, 50 or 84? The obvious answer is 50 lakhs. So if the capital is 50 crores, I would pay 50 lakhs because that is the amount which has been mentioned in his appointment letter. What, let's say in this case, for example, the company is into losses. The company is into loss, right? So we don't have 3 crores, it is minus 3 crores. Minus 3 crores. That means company is not having any profit, not inadequate profit. The company does not have any profit. Company does not have any profit. It is not about inadequate profit. The company does not have any profit. So what is the answer? Negative 60 lakhs. Negative 60 lakhs. So that means even then the company can pay 50 lakhs because our limit starts from 60 lakhs. Basic limit is 60 lakhs even if the company is having losses. Suppose if I change this figure of 50 lakhs and it says 150 lakhs, that means 1.5 crores. 1.5 crores. And if there is a loss, then we know 60 lakhs. If there is a loss of minus 3 crores, and if the amount of remuneration is 150 lakhs, then I will limit it to 60 lakhs. Right? On the assumption that the effective capital is, yes, less than 5 crores. Now, taking, let's say, the effective capital as 300 crores, loss 5 CR, and remuneration is, let's say, 150. Can we pay this? Can we pay this? Remuneration is 150. So if the effective capital is 300, then the calculation would be what? More than 250 under this clause, will be falling under this clause to above 250. So minimum is 120. 120 plus 0.01% of capital which is above 250. Capital which is above 250. So above 250 is 300 minus 250. 300 minus 250 into 0.01%. 300 minus 250 into 0.01%. So we can very well calculate what could be the possible amount. So he will not be paid 150 lakhs, but he will be paid this amount. Right? As the remuneration. So this is how the calculation of effective capital will come based on Schedule 5. Based on Schedule 5. So any questions so far? Let me check it out. Right. So very simple calculation, not at all a problem. Remember, when we try to calculate this net profit, it It is not net profit after deduction of all these remuneration. Otherwise, it will create a complication in calculation and we have to solve that equation part. So all this profit is basically before deduction of the managerial remuneration. Otherwise, things will get more complicated. So the question comes in, friends, how do you calculate this effective capital? So as we understand, effective capital means a capital which must have been deployed by the company for running the business. That is the meaning of effective word, the net capital which might be deployed by the company for running the business. And therefore, we would take all those long-term funds, capital employed. In financial terms, it may be termed as capital employed, and which will include the share capital plus reserve and surplus, excluding this, because this is more of a book entry. Adding all the long-term loan which are payable after 1 year, because less than 1 year will comprise of a short-term liability, as we know, as in terms of presentation of account, anything which is less than 1 year will be short-term liability. And from that, we will deduct all those preliminary expenses, non-trade investments, and accumulated losses. So, a very simple way again to be calculated. Remember the capital employed, which is in financial terms means share capital plus long-term funds minus the losses part. So, this is how we calculate the effective capital. So, the question comes in, friends, the question comes in, on which date do we need to calculate this effective capital? That's also a doubt. On which date do we need to calculate this effective capital? So the date of calculation of effective capital would be two conditions. Now what are those two conditions? First condition is effective capital for a newly incorporated company. So in that case, it would be the effective capital will be based on the date of such appointment, when the appointment was made. And if it is any other company, it shall be calculated as on the last date of the financial year preceding the financial year in which the appointment of the managerial person was made. Which means, if the appointment was made in 2021, we'll see the effective capital of 1920, March 1920. So my remuneration will be based on the previous year effective capital, not the current year. But when it is a newly incorporated company, I will take the calculation of effective capital as on the date of such appointment. So friends, the basic calculation is now understood and very clear for all of us, that if you want to calculate the managerial remuneration part, it would simply mean that you need to refer section 197 and schedule 2 of part 2 of schedule 5 for the calculation part, which makes it very simple way of calculating the managerial remuneration part. The complication will only come in with respect to this particular chart, where you have limitation with respect to each individual. That is important to be remembered, and that will come handy when you come to actual calculation part, because that can create certain bit of confusion for the calculation part. To give you one example in terms of calculation part, let me take one example and make you more conceptually clear the calculation of individual remuneration part. So let's say a company A has, first example, one MD, right? And his remuneration is, let's say, 25 lakhs. And the profit of the company is 5 crore. 5 crore. Then what is the amount of remuneration which can be paid to this one MD? So going by the law, not exceeding 5% of the net profit, if there is one. So into 5%, it is 25 lakhs. So that means he will be eligible for this 25 lakhs. Right? But let's say there is one MD plus one whole-time director. MD is being paid 25 lakhs or 30 lakhs and he is being paid 25 lakhs. Then in this case, what may be the possible condition? Because here the law says that if there are more than one, it cannot exceed 10% of the net profit. It cannot exceed 10% of the net profit. So 10% of the net profit, 5 CR into 10%, which makes it 50 lakhs. So therefore, the amount here is going beyond 50 lakhs, which is 50 lakhs, which is more than 50 lakhs. Therefore, we cannot pay this much remuneration, which is not allowed. Because the limit here, it is said that not exceeding 10% of the net profit in case of more than one. So we need to get a special resolution approved in a general meeting. If we are trying to pay more than 10%, that is 55 lakhs to all the managerial person. And in addition, let's say I'm paying 5 lakhs to non-executive director, 5 lakhs to non-executive director, or let's say not 5 lakhs to one more whole-time director. One more whole-time director, which will totally, it will make 60 lakhs, which is more than 11% of 5 crores. Which is more than 11% of 5 crores. That means in that case, I need to again refer 190 as sort of schedule 5, because that will give us the calculation of amount to be paid based on effective capital. So when you refer to as an individual part, then things will become more complicated. So just trying to recall, friends, the overall concept which we have studied before we conclude today's session. Because in the next session, we will try to cover the calculation of the net profit part. Along with that, we will try to understand the various provisions of payment of sitting fees, what will happen in case of compensation for the loss of office. Then there are very specific conditions mentioned in Schedule 5 also, plus more calculation part, plus more MCQ part, and plus more descriptive type of questions which are based on the calculation of the remuneration part, friends. So what we have studied today is in brief, just to give you an highlight. So we started with section 190, basic definition of KMP. Then explanation to the section of MD definition. Then certain, restrictions that who can be a manager, what is the prerequisite to become an MD. Then section 196, which calls specially that a company can only have a MD or a manager. Then the possible combination, the tenure part, the 5 years part, reappointed every 5 years, can be reappointed a number of times. Then coming to eligibility part, very important, the eligibility conditions mentioned under section 196(3) and part 1 of Schedule 5. Along with that, the basic qualification of the director. Then the 4 condition ICAS, remember what we have studied the mnemonic ICAS for the non-ineligibility conditions under section 196(3). Remember this age game, 21 years, 70 years, more than 70 years. Then the RID concept, the eligibility condition mentioned under Schedule 5. And then the process of appointment of the managerial person, where appointment is done by board and so on. And then when is the permission required from the central government part, that is also important. And you can always remember all the validity of the acts which have been done, even if the MD or the managerial person is not appointed, not approved in the shareholders meeting, then all the actions will be valid. And to which section this, which particular section will not apply to which particular class of companies, that you have to remember. Along with that, remember section 203, which talks about appointment of compulsory appointment of managerial person with respect to certain class of companies. And then the provision of appointment of more than MD of more than one company, appointment of the chairperson as a CEO and so on. Very important, these provisions, with the exception where it is authorized by the article of association and when the company is having multiple businesses. And the penal consequence is not much of relevant. The process of approval, getting the approval of the central government, I think very clear. I think by now you must be very clear in this process part and the conceptual clarity of when the central government approval is required. And I'm sure with today's lecture, you are getting 3 to 4 marks extra, friends. And then the provision of the secretarial audit. So this was 196 regarding the appointment part. And then we moved on to the managerial remuneration part, where we had covered the overall managerial remuneration, 197, inadequate profit, and the effective capital calculation, and the effective capital date. So I hope this will all clear your concept by this point of time. And the problem comes in where when you come to know that the manager is taking certain remuneration when the company has not been able to pay the debts, repay the loans. So in that case, what should be done? Because the effective capital is based on this part. And if the manager wants to have a higher remuneration, then he may defer the payment of loan. That will lead to more effective capital, in effect, more remuneration. So when you are not repaying the loan, then there are certain conditions which have to be fulfilled before you take the remuneration part. So that is one complication which may arise. And then how do you calculate the profit? What is the way to calculate the profit? What is to be included in profit and what is not to be included in profit? And suppose if you are not approved and you have been paid the remuneration part and you have done something wrong, is there a way out to recall that amount, recall that managerial remuneration from the manager or the whole-time director? Is that a possibility? And then finally, what has to be reported in the audit report? What has to be reported in the audit report in terms of managerial remuneration? So that has to be covered in my next class that will be taking on 22nd. So hope to see you on that particular date where we'll complete this chapter number 2 along with practical examples. Right. So thank you, friends, and good night. Sir? Yes.